Let's take a look at how the rand is faring, or rather money matters, as the rand rally continues today against a weaker dollar, as recent U.S. economic data fueled expectations that the Federal Reserve is done hiking interest rates. The local currency has jumped more than 2% against the greenback since the start of November. Portfolio manager at Rand Swiss, Gary Booysen, joins us now to take a look at the latest market developments. Gary, thank you very much for your time on this Monday. So the rand is on track for an 8th consecutive day of gains. What's driving the uptick?
I think your assessment is probably correct. A lot of this is dollar weakness rather than raw rand strength. Part of that dollar weakness is coming from the non-farm payroll print that we saw on Friday. We were expecting around 3.8% unemployment rate in the U.S. We got 3.9%, so the U.S. labor market weakening slightly. We expected 180,000 jobs to be added. Only 150,000 jobs were added. So a little bit of weakness in labor markets, and that's exactly what the market wanted to hear. It means that the Federal Reserve aggressive rate hiking policy, the price of the money in the U.S. just getting that much more expensive as interest rates increased. That's starting to feed into the underlying economy, and that allows us to expect interest rates to fall potentially the first or second quarter of next year. We've seen that pricing change slightly when interest rates fall in the U.S. That makes the dollar relatively less attractive, and you've seen the dollar index moving from around 106 down to around 104.9 at the moment. So that helping to just lift that US dollar pair. So we're currently trading around 18.22 to the US dollar, which is pretty good. I also think we got a little bit of optimism from the budget speech as well. It was a pretty hairy budget speech, there's no question about that. But I think the idea that there were no provisions made for state-owned entities, and maybe the market taking a little bit of optimism as well from the idea that we're going to see more public-private partnerships rolling out.
Okay. Oil prices edged up as top exporters Saudi Arabia and Russia said they will stick to extra voluntary oil output cuts until the end of the year.
So this, I don't know if it was too unexpected, but we've seen a lift in Brent crude oil. It's up around 1.64% at the moment, trading just above $86 a barrel. Saudi Arabia and Russia have been looking at, I think, the global picture, and they're trying to, I suppose, support the oil price to an extent, but just keep the oil markets balanced. So Saudi Arabia will extend their 1 million barrel per day cut all the way until the end of the year. Russia is going to extend a 300,000 barrel per day cut. Of course, this is going to be bad for inflation. It's also bad for South Africa, as we are a net oil importer. I suppose there are other risks as well. So if the conflict in the Middle East escalates, we could see further pressure on the oil price. But I don't think this was unexpected. The deal was already in place, but we'll have the next OPEC meeting the 26th of November, so we'll get more information then.
Okay. Nedbank has cut ties with MTN's Black Empowerment Scheme. What's going on?
So this is Nedbank Private Wealth. So they were offering trading and custody services to MTN's Zakhele Futhi. It's actually a dispute around fees, and it's in arbitration at the moment. And Nedbank Private Wealth has just decided that they will trigger termination. So this will only take effect from the 15th of April 2024. And I don't think from an investment point of view, I don't think investors need to be concerned, because there will be, if the dispute isn't settled and the custody and trading moves across to a different broker, that process will be smooth. It won't affect underlying investors in MTN Zakhele Futhi. It's simply essentially the empowerment company and its custodian arguing about how much to charge.
MTN Rwanda results released for the quarter ended 30 September 2023 are out. Help us make sense of the numbers.
So it was a decent set of numbers. It's small in MTN's life. So you saw a lift in mobile subscribers up 5.6% to 7.2 million. Now remember, Rwanda population is only around 13 million. So MTN is already a very well established operator in Rwanda through MTN Rwanda Cell. I think the challenge for MTN really has been inflation in that market. But as I said, 7.2 million subscribers sounds like a lot, but in MTN's life, life with just short of 300 million subscribers. Nigeria operates as a much more important market for the stock. So we have seen the share price rise just under 1% today, but I still think to get any real movement out of MTN share price, that tax dispute in Nigeria needs to be solved. But from a MTN Rwanda point of view, high inflation, but that I suppose feeding through into the numbers. So we are seeing a lift in the performance, and overall, I think a fairly good job done by MTN Rwanda.
Randstad's portfolio manager Gary Booysen, thank you very much for your time this afternoon.